So to this friend of mine, how do I get on the floor? Because I used to live far from the exchange. I used to live like 100 miles from the exchange. So for me, it was kind of unfeasible being in high school to go to the floor and actually get it done. This guy that I knew used to live near me, and he commuted back and forth every day. So talking to him, I had aspirations about, business school, etc. So he said, Kleber, I work in Bovespa, so if you want to get a piece of action, all you got to do is, well, that would be the equivalent of the Series 7. Hello?
Yeah, I still think it's because you have the volume on in the chat room. Why don't you leave the chat room for a while during this interview? Close your chat.
Close my chat?
Yeah, try that. Not on the Hangout, but in the room.
What about now?
Yeah, you're good.
Okay. So the equivalency of the Series 7 in Brazil, it's like a New York Institute of Finance. You go get a license, so you're able, you have a broker license. In Brazil back in the 90s, so all you had to do is go to that facility, get a license, which at the time you had to be 18 years old. I was 17 change, so they gave me a test for me to qualify for the course, which is an intensive course of almost 45 days. So you have writing skills.
Stuff you'll never use again.
I'm sorry?
Stuff you'll never use again once you pass the test.
Exactly. So once I got this over with, I passed. I think I had like 78% accuracy on the floor because I had to do a floor execution orders. I had 78%. I sucked actually. But the theory was pretty good. I had like 92%. So I passed with flying colors. I got my license. I talked to this friend of mine. He said, so, now you're ready to go to the floor. I came to him and I asked him, what do I have to do? Because it's always who do you know in the market. It's always you have to know somebody. You can't knock on the door and say I want to work here. They don't give you that much. I think even here in the United States, it's pretty selective. It's pretty cohesive. There's some sort of knowing somebody who knows somebody to get access to this kind of a facility. To get in the floor.
Let me ask you this: is the Bovespa floor still filled up with locals? Because
no, actually, Brazil
the U.S. exchanges are they're kind of like ghost towns now.
I'm sorry?
The U.S. exchange floors are kind of like ghost towns now.
Yeah, everything went automatic. Actually, what happened in Brazil was the Bovespa and the BMF, which is the mercantile exchange, they joint venture. They both closed the floors after I left Brazil, actually. And so they acquired a partnership on Chicago Merc. So they have 5%. And Chicago Merc, in a swap operation, they acquire 5% of their exchange. So they went from being a non-profit to a profit organization, like CME. Let me give you a picture. Being on the floor, it's at the time the requirements for me to get on the floor was $20,000. I used to work with my father, saving money since I was 15. I had a couple of $1,000s in change. Not only my dad had paid for my course, but he paid for my education, to get a license because he knew I was sharp. But he gave me the lump sum difference, so I could be an independent trader. So for me, it was, I had a little bit of a thrust.
Yeah, you had a leg up on guys whose family could not back them.
Yeah. You what happened in Brazil? Remember, Brazil's cost of life is very expensive. It's not as here. Like the minimum wage is $800 a month. So even now, back in the day, the market capitalization for Brazil wasn't as close as it is today. When I left Brazil, Brazil grew in a population of 3 million people a year. Over the period of 10 years, 30 million people. Economy boom from the right to the left. But inflation, it was soaring in Brazil 40% a day sometimes. So roughly you had 100-something companies in Brazil. Now you have I think 300 or 400 companies listed on the Bovespa. But the market cap is like less than $4 trillion. It's almost a fourth of what it is in the United States. Here we have a $14 trillion capitalization. It's grotesque, the difference between here in Brazil. The transparency, with the investors, have the 10K statements somewhat. You have to create a market so investors can be comfortable putting money in equities. So everything, it's not like a black box per se. We're savers. We still save money, but it's the participation of individuals in the capital markets. It's some sort of it's alien style. Like, you have to be in it. Like, if you don't, you have to go through a learning curve, which is hard. So at the time when I got on the floor, I had no experience. So this guy got me, my number, and I go over there. But at the time, you had less than 500 people trading. It's not like Chicago market back in the heydays. They had 10,000 traders, on the S&Ps, and you have different derivatives that you could trade. The euro dollar, the gold, the silver pits. In Brazil, all you had in this great marketplace, which was the center of all the action, was the Bovespa. And the Bovespa, you had this selected club of members. So you had most of the guys were brokers, fillers. Like got an order on the phone from your table broker who had an order and passed for the broker, and the broker executed. And you had gutsy guys making a living trading every day. So here's what I'm trying to give you guys a picture of what it was back in the day. Imagine you wake up in the morning and you have a political upheaval. Okay, so it was easy to short any pop. So I learned through this friend of mine that every day you write calls, right? You find blue chip, bellwether companies with a high beta, and that was at the time that was one or two companies, and around these companies you had 200 traders. So it was easy to get in the market, simulate the price action, and wait for the pop. And every time you had a pop, you went and you rolled calls. Remember, you didn't have strangles or straddles or strips or straps. Over there, it was purely not even puts. You couldn't even play with puts. So it was just simply, the simplicity of the trading was buy calls or sell calls, or you had to hedge. So I learned to be a writer. This guy told me flat out, he said, listen, there's this thing about being a call buyer that you're going to lose money all the time. Because, even if you find call options with a delta of 50 or 65, every time the underlying stock moves, it's not going to move as much as on the way down. So I try to always find good quality delta to trade. So I always trade in the money, and I always wrote calls. And it was easy to make money. There was no rock science. So my campaign lasts about 2 years. This guy who actually put me in the floor, he was very conservative. He didn't have a lot of funds. I think he was pretty experienced in what he was doing, but it was very competitive because the nature there was you had a lot of sellers and not a lot of buyers, because at the time Brazil wasn't booming. So the chart, the Bovespa was, from the left to the right in a downtrend, in a very topsy-turvy. So it was range bound, but the declines overcame the upward moves. So it was easy to be a seller. That's you had investors, good quality companies. Brazil, it's one of the greatest coffee exporters, chicken, OJ, natural resources, sugar cane. We are self-sufficient in terms of energy. We don't have to import $11 million barrels of crude every day to keep our economy going, because we extract from the sugar cane. So, but the mentality there is somewhat different, because all goes back to the 1500s, the colonization, the Spaniards and the Portuguese. Instead of colonizing the land and bringing, making the land richer, we kind of extract and sow. So it all goes back to that. That's why the United States is #1 in the world, even with all the problems and the intrinsic problems and the systemic risks on the capital markets. It's still, this country is, it all goes back to the heritage.
There have been examples in the market, Klever, where options writing, you're right, historically it's a very successful strategy because of time decay and volatility popping and reverting to the mean. But every once in a while, option writers got caught.
Oh, absolutely, okay. Absolutely.
All right, so how did you manage risk when you were in that mindset of writing calls all the time and say there was a parabolic move in the market against you, what did you do?
Yeah, remember that Pitsaurus the other day mentioned right in the head, and I used to trade that. Nobody taught me. You know, when I started trading, I didn't lose much. To be honest with you, a lot of people have to lose money in order to learn. I was lucky because here's what I did. I followed the leaders. You know, there was like 5 or 6 independent traders in the floor, and the hearsay was these guys used to be really well off. So every time they came, they analyzed the human psychology, right? The gullible trades. That you don't go for the gullible trades. You don't chase price. Back in the day, you chase the price. You had 20 contracts, $1 slide. You were down, like your half of your money was gone. So in your dribbling your expiration, you didn't have weeklies or anything like that. If you short Brazil after left, if you short Brazil after 99, 2000, you lost your pants. So you have to understand that the trend is your friend. You know, the other day I saw an interview. The guy said, "Don't fight the Fed." I beg to differ. I completely disagree with that. If you're not uptrend and you try every time it diverge from the downtrend, you short it. Okay, but it's easier to buy the dips other than sell extension points. So all goes back to the fact that if the trend goes from the left to the right in an upward move, and you have a nice solid downtrend, even with the high probable interest points that you're gonna sell and you're gonna buy every day in an intraday, okay. But over the long term, if you short an uptrend, you're gonna keep shorting, you're gonna keep losing money. So people have to be careful about saying don't fight the Fed or fight the Fed. You don't have to fight the Fed because fundamentals ultimately drive currencies, and that's the tail that wags the dog. So you have to understand. The only reason I made a living every day in Brazil was because political scenario in Brazil was very volatile, and it offered you the opportunity to capitalize on the downside more than it did if you bought dips. So you just had to wait for the pop every day. Something good came up, but then something bad came up. Therefore, the ability to make the scalp. So scalpers made a lot of money in Brazil. But then it's sentiment changes over time. The interest rates, now, just take a look at it. Let me show you, without dissecting too much from the subject, because I hate talking about me. I think it's idiotic. You have to be shrewd about your decisions and how you pass your message. I'm not a media guy, man. I'm sorry about, I hate talking about the past is the past. Here's what happened.
So, do you know how to screen share?
Yeah, no, actually I don't.
Okay, so go to the upper left-hand corner, and you'll see a green box with an arrow. Put your cursor, then click the screen share, and then click the desktop you want to show. There'll be different boxes come up, and then click Start, and we'll see your desktop. There we go. All right, so you've shared this with us before. This is like your spreadsheet of key numbers. Okay,
let me explain what that is without being. Okay, this is a cloud. Okay, here's what I use. I use in Forex or in any instruments. As you can see, I have. You see the screen now, right? Can I take the speaker out of my? Okay.
We got it.
This is what I call Magnus. Magnus is in honor to the famous prodigy chess player. I built this spreadsheet from the ground up. Okay. Here's what happens. This guy, this trader, this big shot trader, he got to me one day. He said, "Klever, you're doing great now. Let me optimize your transactions here. Let me give you a tale of the tape what I do here." Because I look it up to the guy. He said, I'm gonna teach you once. If you learn this today, you're not gonna need me anymore. You're just gonna use it for your own good. And you're always gonna have tight stops. Not very tight stops because you're gonna get stopped out all the time. But you're gonna use this as a benchmark for your trades. It's gonna be an auxiliary tool so you can maximize your profits. And he explained to me about the Leonardo Fibonacci ratio, blah blah blah. I knew that because I read some books. And I say, everything looks good in theory, but try to apply that in real life, okay? A lot of guys, they're good in books. When they go, they trade, they lose, and they don't ever come back. It's how can you keep for the ninth race. So he gave me the formula, okay? Here's the Fibonacci. You have the extensions and the retracement points. And you use it every day. Pitsaurus the other day, explained that when price come back to the range bound zone, when the run deals are off and they retrace to a normal level, the normalization level that you can trade, you can utilize Fibonacci, right? If you sold an extension, you're gonna look to see what kind of retracement you're gonna have. So these are the moves that you're gonna try. If you're short, you're looking for an exit, and if you're long, you're looking for an extension. That's everybody knows that. So this guy gave me this trader, kept trading for years in the 80s, and this mathematician, it trailed the Fibonacci. So it trails, it gives you entry points. It coincides, it overlaps with Fibonacci. I'm not saying, don't get me wrong, it's not Fibonacci. It's something that you're gonna use in conjunction with Fibonacci. And I challenge anybody to put this in motion and show me that doesn't work, because it worked for me. So here's what I have. One day I was in the United States. Every day I had to manually input the amounts, right? For example, if I was trading, let's say, let's give it an S&P 500, right? So every day opens up at 9:30, at 4 o'clock the market closed. All I needed was the highest and lowest in the closing price, right? And it has attributions on this because it's based on instruments on intrinsic volatility for the day. For example, last Friday, the range for the S&P was 1605. That was the range, the highest and the lowest. So here's what I came up. One day I opened up a computer and said, I want to automatize that. I want to bring that to the next level. I want to have a cloud. I want to have like a rogue trader map. I want to have a cloud in my mind, because as traders, you have to have the ability to have views in your mind. Like, you have to have your cloud. You always have benchmark numbers in your cloud, right? As we speak right now, probably you have a 1775 in the S&Ps. I'm with you on that. Probably have a 2100s on your mind. So when that flash, you already know what to do with that information. No matter fundamentals or chart, no matter, you can draw anything for your convenience on chart, because that's what you want to see. But numbers don't lie, because it's based on instruments on volatility. You can refute that. So basically, I have what I trade. The majors, I have euro dollar, the cable, I have Kiwi, I have correlation currencies. I have, against the Kiwi, I have pound New Zealand. If you take a look at these two pairs, they trade in an inverse way. And when the Kiwi is going up, pound Kiwi is going down. And then you have euro New Zealand, and I have Aussie, I have euro Aussie, I have euro CAD, I have commodity currencies also. I love to trade this, and I have US CAD, and I have New Zealand CAD, and I have a US against Norwegian krone, which is very volatile. I love to trade the currency because bank manipulation occurs in that currency. Like Piotr said the other day, time is everything. Watching the tape, watching the price action. What I do, I try to identify the top. I only trade extremes, like 89 RSI and 25 and 29. If you get caught up in between, if you're short and it goes up, if you chase price, you're going to lose money. And you're using the wrong leverage in this market. That's a message. When I talk to my friends, I don't have a lot of friends. Actually, I don't have any friends, but I know people that I talk on a daily basis. Did I ever lose money in Forex? Absolutely.
You have a few friends.
Because you have the leverage that the houses give you, and you have the leverage that you're utilizing. What do I mean by that? It's very simple. For example, let's just take $5,000, okay? You have $5,000 and you operate, let's do the math, right?
Okay.
So let's say you have 100,000 lots, right? One standard lot. You divide that by $5,000. What's your leverage? Do you know your leverage?
Do you?
Hello?
Yeah, I'm listening to you. I can never tell when you hear me or not, because let me just clear one thing up. You do have friends now.
Can you hear me?
Yes, I can hear you. Go ahead.
Hello?
I'm here. I'm here.
Yeah, okay. I asked you, do you know your leverage? when you're trading at 100,000 lots in a $5,000 account?
Yes.
20 to 1.
Okay.
Okay.
Yeah.
So it probably is going to cost you $4,000 to get in the trade, right? Let's say Gopi, right? Gopi against the yen, cable against the yen, right? So
Okay.
that would be unfeasible for anybody to trade 3 standard lots in a $5,000 account, right? You wouldn't be able to because you got to put your margin requirements. So in the past, anybody, you have to learn how to utilize the leverage. Always under leverage your trades. Always know how much money you're putting on the table in order to participate. Let me go back to my. Can you hear? You see the screen?
Yeah, we're still seeing the same thing. You want to show charts now?
Yeah, I just want to. Okay, let me show you one chart.
All right, so you're going to probably have to go to screen share or move that over again. Why don't you turn off screen share and then use the desktop you want to show the chart on. Turn it off and then on again, and then click the box that has the chart.
Okay. So I stopped sharing this.
Okay. Now start sharing again. Now you're back on screen, so hit the screen share again, and then click on the box that has your chart. And you have friends now, right? You said you don't have any friends.
Okay, I appreciate that.
Okay. Otherwise, I'm going to have to sing Mr. Lonely to you. I'm lonely, I'm Mr. Lonely, I've got nobody to call on the phone. Well, now you have a family, man.
Okay, let me go back to Magnus, because if I don't show you that, I'm not going to be able to see 2 screens at a time.
All right.
So here's what I have. When I translate it to Excel, right, I have all the detail of the tape here. So I have the numbers they put. I drew that myself. I have the trend for each pair. I have my strategy for each pair. I have my broad strategy. For example, euro dollar downtrend. Every time it pops, sell rallies. Pound the cable, downtrend too. But I buy the dips. It works for me. I get close to a critical bank manipulation level. Buying the cable, it's easier to make money. It came all the way, and it's easy to make money. I like to buy cable. I like to get long cable. A pound New Zealand, it's in an uptrend. Take a look at it. But I like to buy dips. Uptrend to buy dips. But there's sometimes it's in an uptrend, but I sell rallies. Like Euro New Zealand, it's a very volatile currency, somewhat difficult to understand. But like when you had the last mini crash, pound New Zealand went to 185. Never look back there. Bank manipulation at its best. You run, that day. If you cut the top, if you cut, the reverse candle, you're seeing it pretty now. It shed 2,200 pips already. So these attributions, remember, came from the trader. It's not mine. I only utilize this formula to increase my PR on my account, which worked. I'm not a millionaire, but it got me forward in life. It got me enough cushion to keep forward without being specific. So, okay, looking at, let's take a look at the euro. Let's go to the center of the melon. So euro, everyone wants to buy the euro now because they think the Fed's going to be standing pat next Wednesday. Blah blah blah. A lot of people called the euro trade. They said buy the euro. I was looking the other way, even though I didn't short it. I don't get along with euro dollar. I don't know why. So my algos, they show, let's say, so this is the first quadrant, which we're not looking at it today. We're going to look at the second quadrant, which based on euro's own volatility last Friday, okay, 110.74 is 110.76 is your simple moving, your simple average for the euro. Okay,
I
so
saw,
the
I
average
saw
price.
one, I saw 107.80 number there, which is
Oh no, no,
a
I'll get to
pretty
that. I'll get to
important
that.
number.
I'll get. This is just an attribution. I'm gonna get to the
Right.
buys and the
Okay.
sells. I'm just
Okay.
giving a comparison for the comparison standpoint. 110.79. It closed at 110.18. So the closing price, right, was below its own average, its own average price. So that means that it was projecting the down movement for today, right? But it's unbiased. It doesn't matter. You're gonna trade either way. You're gonna trade on the buy side. You're gonna trade on the sell side. So I have my cloud. I have my 5 buys and my 5 sells. You're gonna use that. You're gonna have enough 6 cents to trade around hours, like between 2 and 5. If you like Pete Sauer said, I like to trade at 3 o'clock because there's not a lot of liquidity and it can drive the price up. Yes, that's true. I agree with him in all sense. That's the time that you have bank manipulation. They fill orders. They want to prop the market so they can make a buck. Absolutely, it's there. Anybody can analyze and get to the same the common denominator. So I have 5 buys and 5 sells. Those are entry points, right? So just let's take a look at the euro. You see this 180.55, 108.55.
Yes.
That's one of I'm interested in acquire the euro right here. Why? So let's go back to the chart. I'm not looking at the sell points. I'm looking to buy. Okay, the reason why, because this trade can unwind. It can unwind very badly to the upside in a Fed day. You know that can go 300 pips against you. So if you short the euro, this is an intraday, by the way. I calculate it every day. The forex for the stocks, I calculate it after 4 o'clock. I get the high, the low, and the closing price, and I put my attributions. And Magnus gives me my 6 cents. It gives me my clouds. It gives me the tools that I want, so I can be ready. It's like a religious guy waiting for Armageddon every day. You know, I'm waiting for my prices so I can be comfortable. And once I'm comfortable with that, I look at the charts, and I never trade 5 minute charts. I'm always put 1 hour to 2 hours to see the broader moves, you know, so I can catch a manipulation. If you trade simply on 1 minute or 5 minutes, I used to do that in the past, very ineffective. It's not going to the pit, analyzing the movement, because you can see who's buying, who's selling. Forex, you don't know that. Like Pete Sauer said the other day, man, I like this guy because he was straightforward. You know, he didn't throw a lot of useless information. Like I see people throwing charts back and forth. It looks great, Dale, but that doesn't do it for you, man. Like you have to try on your own. You have to calculate your risk reward. If I don't see 3 to 1, if I don't see 3 times more chance to win in a trade, if I see as a trader, I say, okay, there's a chance that I'll make this is a 2 to 1 trade. I'm sorry. If you say, oh, there's a chance that he slides 3 and I make 2, what are you getting? You know what I'm saying? So you have to be more on the upside to make your money, other than
So
just project.
you'll only take 3 to 1 RRs.
Well, you know, each his own. But I think if you consider the downside more than you consider the upside to make money in a trade, you shouldn't be in that trade. If you should ask the others for advice after you execute a trade, you shouldn't be on that trade. You know, if you're not comfortable to put your stops at 25 pips from the trade, like okay, let's go back, because like I told you, I cannot teach you guys everything that I know in 15 minutes. It's impossible. And I'm sorry, I don't have
Why don't you go over a little bit? I'm interested in learning a little bit. I know you can't teach everything today, but what I like about your style is that you'll come in with thirds. You know, you'll buy a third, you'll short a third, you'll short a third. You piece in and you piece out of trades. Can you explain that to our community?
Absolutely. Let's say you're not convinced enough about your trades. Okay, the reason why is very simple. If you're trading at 100,000 units, right? Every pip is $10. Let's talk about euro dollar, right? So you buy there. Let me see a chart here. Let's talk about see this number 108.55. Let me go back and talk about that. Let me go back here. Stop sharing. And then I go here And then I'm gonna euro dollar. Okay, so that's the weekly chart, right?
Yeah, got it.
So I'm gonna remove these. I'm gonna remove these. 108.55, right? Let's just say that's that. Remember, Magnus told me to buy at that level. You know, it's not like blindside. I'm not gonna go ahead and put 300,000 units and buy the euro. No, you know, you're gonna look at fundamentals. You're gonna see what's up with the price movement, and then you're gonna take a shot. That's work for intraday traders. I'm a scalper. You know, hardly I hold. I'm short up, you know, but hardly I do that because I'm waiting for the inflection points. Okay, it's a difference than being an intraday trader and waiting for big shift in sentiment. That's different. Okay, so what I thought, you know, 2074 and the S&Ps will be like a China wall. It ended up to be a breakaway, you know, gap. We're gonna have to see it, you know, if that's gonna validate. We're gonna have a retracement back to the normal range. But we're gonna drive 50 more points in the S&Ps.
What are you seeing at 108.55, 108.50?
Well, you know, look, I have to let me show you this chart first, okay?
Mm-hmm.
So.
Okay, now I see. It's just a pivot point.
You see this line?
Yeah.
That's what my buy point would be. That's exactly what Magnus, based on Magnus, you know, in an intraday. So let's bring it to the daily, to the 1 hour chart now. I'm right here. So I'm not in a rush to buy the euro dollar. You know, there's a confluence of factors it's gonna make the price go that way. That, you know, is a high probable point to get in the euro? I say yes. Remember the day when I took the shot at the CAD at 129.38?
Uh-huh.
You can. I was precise in that move because when it slid down, remember, and we were talking about that. It's not even a joke. I took a shot at it and I exited. I was very conservative in my trade. Remember, Pete Sawyer said the other day, make 30 pips a day, make a list of everything that you want to accomplish and spend. I modify a little. I say, make a list of everything you want right now and spend it 25 years of your life getting little by little, piece by piece. Don't get greedy. Don't try to catch all the moves every day. Don't try to trade with Citibank guys. You know, these guys, they own 70% of the market. They will manipulate. They'll get your money. They will throw you down. So to be conservative, I'm right here. I want this point right here. When it falls right here, I'm gonna pull the trigger. If it's today, no problem. But tomorrow, based on the euro's range, we're gonna be talking the same level right here. So that's what I want to be. You can do this, look, and then you're gonna, let's just say the 1 hour chart. Okay.
Okay.
Let's take a look at the 1 hour chart. So these are Fibonacci retracements, okay? Right? So you can get short the euro again. You see what I'm saying? So for example, 618, there was a high probable interest right here, right? And then you got short here, right? 618, right here. So there was some sort of a movement right here, and the rejection came right over in 1 hour chart, right? 111.16. So you had almost an engulfing pattern right here, and then you had a rejection, then it's like another 100 pips. But I'm looking out of this range right here. So I'm looking somewhat 100 pips from that level. I'm one away. So that's the point I want to get in. That's the 1 hour. Let's take a look at the 15-minute chart. Let's take the 2 hour chart. Let me erase this line. And let's take a look at it. So I'm right here, and the 2618, the extension for your short is right here. So I'm somewhat between the 1618 and the 2618. I use that in confluence in conjunction with Fibonacci, with the 320, the 50, the 618. Let me show you the S&Ps, and then we can wrap it up.
Okay.
Look, we could be here all day, and it still wouldn't be enough for me to put in the simple examples. You just got to spend a day here with me and see what I do, so you can have an understanding. I don't trade 100 million lots. You know, I'm far from trading 10 standard lots, but I'm always under leveraging my money. If I have $200,000, I'm gonna put 10% of that. I'm gonna use 10% of my risk. The reason why I break my lots is to give myself, if my first lot is not complacent with my risk reward, the second, third is gonna be, or the third, and then I push through my trade. The reason why, like if let's say you have $10,000 and you want to put it to work, the risk management perception is you're gonna break down your investment. You're gonna assess your risk, and you're gonna break down your entry, right? If you're wrong, it's gonna slide down. It's gonna create an average, because you're not buying multiples of 100,000 lots. If you're buying 100,000 lots, 33,000 at a time, it gives you enough cushion so the price can go back to normality. If you're not, and then you can go average, even more, but I don't recommend. I say use large stops, don't use tight stops, because you're gonna get stopped out all the time. If you put 5-6 pips stops every day, you're gonna lose money every day. You're not gonna make a buck. This machine is gonna take away your greenback. It's some mathematical certainty. I'm not just saying that. It's gonna happen. So
Yeah,
I'd stay 25 pips.
Hard to be right for a day if you can't be wrong for 5 minutes.
Exactly. Look, the whole perception of this game, Dale. I don't watch TV, man. I don't care what the pundits are doing, what they're pounding on the table, because there's always a shyster ready to take your money. What I learned with my own experience in life, okay, training calls, writing calls, analyzing, seeing where the action was, because it's easy to understand when you have sellers, when you have buyers, when you have firm orders, and you can trade around that. You find entry points and you take a shot. But Forex is very broad. So yes, you have to go back to the fundamental analysis, and you have to take your best shot, right? But you don't know who's buying, who's selling. There's 10 banks there lined up to take your money. But you only, if you convince yourself of something, right? You better be right, because if you're wrong, you're gonna keep pounding the table every day. So but I'm right about the trade. But the year was good. I thought the year was going to go to 114. Now it's 109 and change. Why did I make a mistake? I told people to buy the euro. Now it's sold. You try to convince yourself. That's where you're making a mistake. You gotta accept. You gotta accept it. Cut your losses. One thing that I learned about this: leverage trading is the evil. Is the mother of all speculation. Is the evil. If you don't manage leverage properly, you're gonna bury yourself in problems.
It'll manage you. Okay.
So pick your battles. Find a currency to trade. That's a message I want. I don't want to be too technical and draw butterflies and flags. I know all of that, But if sensing, knowing, having tools, taking an advantage, that's a message I want to pass you guys. Probably I didn't pass my message completely, but with time, I'll let you guys to understand that, trading the Fibonacci is great. Look, this is the Fibonacci. This is the S&Ps, right? You see the trend line? Beautiful. See right here, 38.2, okay? On 2014, a big whoosh down. You got bought, right? Because the trend line was from the left to the right. Everybody bought it. That's a QE, right? The injection, buying bonds. The Fed, was relentless. It didn't want you to sell this market. The difference about these capital markets and Brazilians, that they don't give a flying bean fart about the capital markets. The Bovespa 70,000 points, now 40-something thousand points. Petrobras, look, a month before Petrobras started getting into the bribery, you know, all this, one of the greatest oil integrated companies, this guy goes on TV and says, oh, Petrobras was $74 a share. This guy says, buy Petrobras. Petrobras is trading at $5. You know, you're living in a shack, in underpass now. If you listen to that guy, you know, but if you took a look at the indebtedness of Petrobras, they owe $100 billion in the books. You know, they take a look at the books, you're going to see that $68 billion of that money, it's in dollars. They involved in bribery. You knew this company was in trouble because it's a national company. The government owns it. It's not like a free it's enterprise market. Out of the 400 companies listed on Bovespa today, I think 150 companies, I'm not mistaken, are national companies. So you don't, you know, but they own companies because they're nationalists. They control companies, but they don't care if your capital market is down 20%. They don't care. They care here. The Fed is trying to harbor this market at all costs, and we're gonna have people who are chasing. Just listen to this now. People who are chasing this price action, the S&Ps, right? We try to catch a falling knife on the opposite side. They're trying to time the S&Ps, right? Because remember, 500 industrialized companies, the best 500 companies. You know, we're gonna keep losing. Like if you keep shorting the S&Ps, you're short for a pop on the downside. You're short for 20 points or 15 points. I know the fundamental problems, the systemic risk on this country is high. The bank, you don't know what's in the bank's books. Nobody knows, Dale. Even people who you interview every day, they try to put a lipstick on a pig and say, no, but the Fed got your back because they got a machine. They can print money every day. They're gonna keep pumping liquidity to this market like there's no tomorrow. And that's when, if everything is great, everything's great. You know what I'm saying? But if everything is bad, they're gonna make sure that it doesn't get any better. They're gonna keep pumping liquidity, and what's gonna translate to the capital markets? They want people to see the United States as the yardstick for the world, man. Okay, they want you to be confident that your 401k is not gonna get lost. 2008 is not gonna repeat itself. We're gonna have mini flash. We're gonna have 50 points in S&P. We're gonna have corrections, but it's not gonna be down drum. You know, it's not gonna be the end of the world. Believe me. Every dip on the S&P is gonna be bought. Mark my words. We're gonna retrace to the 302. Yes, we're gonna 1823. Easy piece Japanese. We're gonna go there. Okay, and a lot of people are gonna look like genius. Take a look at this chart. You're gonna see the trend line, October 2013, 12 all the way, bam, right here, 21, 23. Do I have that in my algos? Yes. Let me show you. Sell points? Absolutely. So let me go back here.
Okay, we're going to have to wrap it. I have another interview in 8 minutes, Clev.
Okay. So you want to wrap it up now?
Yeah.
All right.
I want to thank you for your efforts today.
Thanks for your time.